What happens if a cosigner dies or declares bankruptcy? Breaking news for borrowers. A question many are asking right now is, what happens if a cosigner on a student loan dies or declares bankruptcy? This topic is especially relevant today, as more people are navigating the complexities of student loans. Understanding the implications can help you make informed decisions about your financial future. When a cosigner on a student loan passes away, the responsibility for the loan typically shifts to the primary borrower. The debt does not simply vanish. The primary borrower must continue to make payments as outlined in the loan agreement. This situation is more common with private student loans, as federal student loans usually do not requiring a cosigner. In some cases, if the loan is with a private lender, there may be options available. Lenders might consider releasing the cosigner from the loan or modifying the terms. However, this varies based on the lender's policies and the specific loan agreement. It is essential to check with your lender to understand your options. Now, if a cosigner declares bankruptcy, the situation becomes more complicated. While bankruptcy may relieving the cosigner of personal liability for the loan, it does not eliminate the debt itself. The primary borrower remains fully responsible for repayment. The lender can pursue the primary borrower for the entire amount owed. The bankruptcy of a cosigner can also impact the credit standing of the loan. However, it does not cancel the primary borrower's obligation. If the cosigner was a joint account holder or had legal responsibility for the debt, their death or bankruptcy could affect how the debt is managed. It is important to note that surviving family members who are not cosigners or joint account holders are usually not liable for the deceased debts. Debt collectors can seek payment from the deceased estate, but they cannot pursue family members unless they have legal responsibility for the loan. To summarize, if a cosigner dies or declares bankruptcy, the primary borrower is still responsible for the loan. Payments must continue, and options for releasing the cosigner depend on the lender. Family members not involved in the loan typically do not face liability. Understanding these aspects can help borrowers navigate the financial challenges that arise from such events.